Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 21st of December and our last market newsletter for 2020. Now, coming into the last week of the trading year, we might have expected some more subdued market conditions, but having said that, there seems to be quite a bit going on, particularly to keep traders on their toes. Over the weekend, the UK have extended their coronavirus lockdowns, and that's increased many restrictions across the UK for many Britons. Also, the Brexit trade negotiations between the UK and the EU have again yet failed to come to some sort of an agreement, and another deadline has now been breached. Those trade negotiations reportedly still seemingly continued with another extension. On the good news front, we've had some agreements in the US over a $900 billion stimulus package. So the agreement seems to be there, and this now needs to be ratified before being executed. So that is likely to be a big boost in the US and likely to be felt in some of those US markets. So let's take a look at some of the markets here running into the remainder of the year. If we look at US equity markets and start to think maybe about what sort of themes we might see wrapping into the end of this year and going into the first quarter of next year. US equity markets have had a very strong run, no doubt about it. Even surpassing the previous highs before the coronavirus crash, and this is the Dow, but the S&Ps and the Nasdaq look remarkably similar to this. So the question is that where are these markets going to go from now? Now, these markets are pricing in forward action. They're forward looking. So they've already priced in coronavirus vaccines. They're pricing in stimulus packages, which has been some of the fuel that has really helped these markets to recover in the astonishing way that they have. But from these levels, how much further have they to go in 2021? And this is going to be the big question sort of going forward. I think whichever market you look at, some of these are looking rather toppy now. They've had a very, very good run. And we may well start to see some sort of weakness coming in the early part of the year before maybe a continuation to the long side. There's a lot of things going on which can support these markets higher. Of course, negative interest rates, or certainly near zero interest rates across the globe in many locations, is certainly helping fuel money inflows into stocks. And I don't see that sort of really ceasing anytime soon. So we might see some continued growth in these markets, but again, there is also a school of thought here for some kind of correction and some kind of pullback at least. So coming over to some of these sort of lower time frames, if we take a look at this perhaps on the daily time frame, we can see that some of these key levels around that 30,000 key level for the Dow have now been taken out, albeit that we're in the Globex session at the moment. If these markets can't hold above here and break back above these when the cash market opens, then we could see some continued weakness, and back into 29,150 here brings the market back into the previous high that these markets hit. So that's quite a decent sized retracement. Back through here brings us back into 28,600 as well. So we've got some fairly significant sort of trading windows should the markets start to roll over, and should these trends, which are coming close to being compromised now, start to be taken out. If we come over to the commodities markets though, commodities are looking extremely strong, particularly going into the beginning of next year. Gold and silver have now broken out of their sort of short trends, those interim short trends that we've had here. We've now got higher highs and higher lows on gold, and the market here has recently broken through. This morning's trade has broken through that key 1900 level. So if we look at gold here, if we can get above 1900, we've got a trading window up there to 1920. Now that level there we've got it in there sort of grayed out slightly because it's a level that's more significant on the intraday time frames, but you can still see the relevance of it here on the daily time frame. But the significant price points for gold, I believe, are around 1900, 1920, and then up to 1950. And as this uptrend can continue, then we've got some decent sized trading windows to the long side for gold over the sort of foreseeable future. Come down to the sort of lower time frames here, you can start to see that we've got some very good trend structure starting to form in these markets as well. Now gold and silver are highly correlated, and if we come and have a quick look at silver here, we can see that again that's had a very good run as well. Now silver has already broken through this, or broken out of this sideways consolidation, so we're above the $26 level, and as long as the market can hold above this level, we've got some fairly decent sized sort of trading windows up here to around that $28 price point in the sort of near term, and then above that up to the 30 price point as well. So again, two markets there which I think we'll continue to see positive themes going into the end of this year and into early 2021 as well. Now coming over to the currency markets, one of the biggest themes that we've started to see is dollar weakness, and at the moment, you know, this is being it's not going down lightly. We've got a burst of strength in the US dollar at the moment, as it's bouncing off some very significant levels around that 90 price point. But taking a look at this from a broader perspective, markets that may well benefit from a weaker dollar would be markets like euro dollar and some of those major FX pairs. So the likes of euro here could see a continuation of this move. Now at the moment we've seen a very solid move here in the euro to the long side. This has been on the back of the US dollar weakness, and you can see the move that we've had. Now some sort of retracement back into 120 looks like looks very reasonable from a technical structure. It will also certainly help the market to pull back and find support at some key technical sort of areas, which are where lots of technical traders like to look at positioning. So I'm looking at some sort of interim weakness for some of these markets back into key levels, but I think a continuation of themes going forward into next year could see continuation of some of these dollar markets long, so the likes of euro dollar. Great British Pound is difficult to call because of the circumstances around sort of trade deals at this moment in time, which are likely to have a major impact on those markets. But other markets like the pound dollar Swissy and the dollar Aussie dollar as well could also benefit from a weaker dollar and a continuation of some of those trends. So there's a few sort of themes there that we're looking at going into the remainder of this year and into the beginning of next year particularly. So just brings us to wrap up this session, and I'd just like to say thank you very much for joining the market newsletters. I certainly hope you find them useful. And also a big thank you to Blackwell Global, who have been our partners in running these newsletters, and also the live market streams which we run on Wednesdays. Now going forward, the next market newsletter will be on January the 4th, and the next live market stream will be on January the 6th. So wishing you a fantastic holiday period, and looking forward to speaking to you next year. Bye for now.